afternoon, everyone, and welcome to episode 44 of MSME Masterclass. I am thrilled to introduce our distinguished guest today, Mr. S S Nayak, who is Senior Partner at MS SS Nayak and Associates and co-opted member of MSME and Startup Committee ICAI 2324. Mr. Nayak brings extensive experience as a speaker, anchor, and host across multiple channels. In financial analysis, he has delivered insightful union annual budget analysis speeches in various forums over the last 2 decades. Mr. Nayak is an accomplished author with 3 books, each brimming with pragmatic wisdom on ease of business and living. His dedication and contributions to the MSME sector have earned him numerous accolades, including the KBL NITTE Lifetime Achievement Award at MSME Conclave, the Lifetime Achievement Award for Mentoring MSMEs and Startups at the HDFC PCCI MSME Conclave, the NITTE KBL MSME Ratna Award, and the Mentor of Mentors Award at MSME Conclave, among others. Mr. Nayak's expertise extends beyond local recognition, as he has been a lead speaker in the prestigious Dare to Dream program conducted by the national channel Zee Business in Mangalore. Over the past 2 decades, he has served as a pivotal resource hub at various MSME forums, offering invaluable insights and guidance to businesses navigating the intricacies of the sector. We are privileged to have him today with us, and I'm sure his wealth of knowledge will enrich our discussion. Please join me in welcoming a warm welcome to Mr. S S Nayak. Welcome back to MSME Masterclass, sir. It's a privilege to have you again.
Thank you. It's my privilege too.
Sir, our topic for today is challenges with MSME business financing in India. And my first question to you is, what are the common financial challenges that MSMEs face when securing funding?
Normally, when existing MSMEs, if they want to make expansion or with additional requirement of funds, the requirements are different, and those who want to start up new units, the requirements are different. But common points which I can highlight is, main thing is collateral requirement. When you go to any bank or financial institutions, rather than viability of the project, first they should ask viability of the project, but instead of that, they insist on collateral requirement of the project. Next one is high interest rates. If the financials are not according to their norms, say for example current ratio 1.33, debt equity ratio 2:1, TOL by TNW above 3, then definitely they will charge higher rate of interest. Turnover, increase in turnover year by year, then net profit ratio, GP ratio, they have some benchmark ratios. See, no MSME can work on the basis of benchmark ratios. There may be ups and downs. In such cases, they will definitely, if all these ratios, if they don't meet their benchmark ratios, they will charge higher rate of interest. Then newly, those who want to start new units, their creditworthiness and lack of credit history. See, now CIBIL score, we might have seen in many cases it comes -1 if there is no credit history. We are under the impression that if we are debt free, no loans is taken, we are the best. No. If you have taken some loans, have repaid promptly, then only your credit history will be generated. So, there is also one of the challenges. Then adequate financial literacy amongst these entrepreneurs. They need to know about latest development, latest schemes, latest benefits, incentives of state government, central government, SIDBI schemes, ladies, women-led entrepreneurs. Lot of schemes are there. They should be aware about all these schemes. Then delayed payment from clients. See, the main challenge is banks give working capital limit, book rates up to 90 days. Normally, they restrict. Above 90 days, if there is receivable, they will not fund it. It will be very difficult for the promoter to, what we can say, that is working, to meet the working capital requirement in that scenario. Next, limited access to government schemes, as I already told. Then equity funding ecosystem in India for MSMEs is very weak. No person, venture capitalists or no angel investors. They are interested in taking risk with the MSMEs. Then lack of access to formal financial institutions. See, many people during urgency, if they want tomorrow fund, today they will decide. Last minute, no bank will give. They will take their own sweet time. So minimum 30 days, 45 days, 2 months, depending on the power, that is the hierarchy they take. In such cases, they either resort to this NBFCs, non-banking financial institutions, or they take personal loans, or they go to money lenders, which are finance companies. They are all charging very exorbitant rate of interest, and more than that, they don't give longer tenure of repayment. In such cases, there will be stress while paying EMIs. Then regulatory compliance burdens. See, sometimes government will suddenly come out with some checks and balances. To comply with these regulatory compliances, sometimes they face difficulties. So these are the common challenges, and undue delays in sanction of loans by banks, and margin money requirements. Normally, minimum margin they insist is 25%. In such cases, very difficult especially for first generation entrepreneurs, or for those who are going for expansion, substantial expansion. If they cannot bring in additional capital from their personal side, it is very difficult to meet the requirement of expansion or lenders.
Got it. And so, how do high interest rates impact the growth potential of smaller businesses in India?
See, high interest rates, normally what happens, see, nowadays competition is such, there is a razor thin margin in any business. If the rate of interest burden is more, definitely the cost, that interest cost will add to their cost. Okay, then reduced profit margin. See, because of debt servicing costs, if it is higher, then their margins will also reduce. Then limited access to capital. See, normally what happens, that calculation will come DSCR, debt service coverage ratio. Minimum it should be 1.5 and 1.5 to 2 they take. In such cases, if the interest rate becomes dearer or costlier, then DSCR may fall down. Then that availability of the funds will also be reduced. Then cash flow constraints. Because of higher EMIs, commitment, then their cash flow will be also restricted. Then it will hamper the operational day-to-day requirement of the working capital also. Then sometimes that expansion plans, to take advantage of the situations, sometimes immediately you need to make expansion. But because of these higher interest costs, you may postpone your expansion. In such case, your competitors may already enter. Then you will lose the benefit of first person who will introduce that. Then increased financial risk, the default of repayment of the loans. Then competitive advantage, I told, disadvantage, I already told. Then these are all the issues if the rate of interest increases.
Can you, sir, elaborate on the role of collateral requirements in securing loans for MSMEs and what alternatives can be made available to them?
See, bankers give loan on the basis of the risk perception. So if the risk is low risk, normal risk, moderate risk, and high risk, they categorize. See, if it is low risk, your rate of interest will also come down. Then the availability of the funds also, whatever your need based, they will fund. Otherwise, what happens? They go for collaterals. So usually if you give even 100%, some people, they think that it is not enough collateral securities. Then properties. If they want to give these borrowers want to give the properties, then they prepare their house properties. But borrowers, what they do, House, normally there will be restrictions from family. Other than house, you mortgage something else. But bankers, they think that house is the most safe. Then again, they will think of rural properties. They may not be. They are not interested. Only urban properties, because in case of any default, the securitization or encashing by auctions, that they will think. So that will be very difficult. Then in case of larger loans, one particular big property if you give, if there is any litigation or any issue, there is a problem. So in such cases, 2-3 properties, if they spread that, then the risk is also spread. So then creditworthiness, it is also depending upon your net worth and your collateral, whatever you are offering. So, but sometimes even if the project is viable, even if the bankers or financial institution, they think that is the most viable project, because of the lack of collateral, they give some other reasons that this project is not viable, and there may be barrier to the entry itself.
So we've heard and learned a lot about digital lending platforms. According to you, how has their introduction changed the financial landscape for Indian businesses?
See, there are a lot of digital lending schemes in various banks. It depends on institution. There was a popular scheme called PSU Bank 59 minutes loan scheme. In that, within 59 minutes, you will not get money, but you will get sanction. हम कभी भी दूसरा वो प्लेटफॉर्म में बोलते थे, देयर इज 59 मिनट्स ओनली एंगेजमेंट, शादी नहीं है. शादी के लिए बाद में बहुत काम टर्म्स कंडीशंस होता है, बट विद इन 59 इन प्रिंसिपल सैंक्शन यू विल गेट. दैट इज वन ऑफ द डिजिटल लेंडिंग प्लेटफॉर्म. देन हियर नाउ मेनी बैंक्स, फॉर एग्जांपल नाउ इंडियन बैंक, IND GST scheme is there, up to 25 lakhs directly you can apply through digital. Now SIDBI schemes are there many. There also you can apply in digital. Now almost all Mudra loan schemes, they are also under digital. Many private banks also now, for example Karnataka Bank, up to 100 lakhs for new borrowers, they have introduced digital lending schemes. Existing borrowers up to 200 lakhs under digital mode only they are receiving the applications. But due to this digital lending, the process becomes little bit fast, because manager cannot take your applications and keep in the drawer and all. So automatically when it is logged in, you will. And new generation now, private sector banks, they are very smart now. They are doing most of their lending through digital lending only, and it gives transparency also. What are all the papers have been filed, and financials, whatever it is there, that is already fed. Then their bank statement in PDF form will be fed. All these details will be available instantly. GST returns, that link, that also they will get immediately. Based on that, they can take note of all the documents. Then they can appraise also digitally, and they can make the disbursements also very fast. These are the digital initiatives taken up by various banks now.
Let's move on to loan applications part of it. So, what do you think are the key factors that banks and financial institutions consider when evaluating loan applications for MSMEs?
See, loan application is like a horoscope of the borrower, okay, or the units. In horoscope, वो कुंडली में क्या क्या है वो सब देखता है. डेट ऑफ बर्थ क्या है, माँ कौन है, बाप कौन है, गोत्र कौन सा है, बाद में कौन सा कुंभ राशि है क्या, मीन राशि है क्या, देन नक्षत्र क्या है, वो सब देखता है. सो लाइकवाइज इन एप्लीकेशंस आल्सो नॉर्मली व्हाट दे आर डूइंग, सम फॉर्मेट इज देयर. इन दैट फॉर्मेट, व्हाट दे सिंपल फॉर्मेट, in that name and address of the promoter, name and address of the unit, then their age, qualification and experience, then whether the unit is SME or not. If it is SME, whether it is a micro, whether it is small or medium, based on the this one Udyam registration certificate, they need to enclose. Then they will consider the scope of the scope and marketing potentiality for the products or services which the unit is rendering. Then cost of the project in brief, based on that is land or building, machineries, working capital, power connections, all these things in case of manufacturing units. Then means of finance, promoter margin, how much, all these things they will see. Then business plan. If the loan is availed, on what basis? Plan. How they plan to repay. Debt service coverage ratio for next 5 years, 7 years or 10 years based on the tenure of the term loan. Then what are the collaterals offered? What is the net worth of the promoter? Then what is the experience and managerial experience or production experience of the promoter and existing commitments, repayment capacity. Then if the banking relationship is long, for many years the banking account is maintained with the same bank, then it will be eased out. Then market potential, then economic environment, that also will be considered. These are the contents in application while going for loan with banks or financial institutions. Then naturally they will see पैन आधार देख के पहले सिबिल देखता है, सिबिल ठीक है तो हंसता है, नहीं तो वो they will not carry it. That's all. Minimum 750 they insist, 700 is okay. Less than 700 they don't see at you. Above 750 they will smile. Above 800 they will chase you. Okay, this is the thing which then in case of CMR Sibil, that is business Sibil, there are also one very good 2, 3, 4, 5. 5 से ज़्यादा है तो वो लोग देखेगा भी नहीं. That is the situation.
And how does lack of formal financial documentation affect the ability of Indian small businesses to access credit?
See, now sometimes creditworthiness, proving creditworthiness also is a difficult thing. See, new generation entrepreneurs, they are tech savvy, technically qualified, experience is there, everything is there. But to prove creditworthiness is a difficult proposition. Then lenders, they look at these new entrepreneurs with the higher risk perception, because they have rating these yardsticks. Based on that, they go on giving rates. When they go on giving rates, naturally new generation entrepreneur, there will be a problem. But existing units with healthy financials, they will get better rates. Next, government schemes, some particular projects, if they are not befitting as per the government schemes, then it is very difficult for them. Or banks, they themselves have their schemes or tailor-made schemes by the banks. Say for example, Mudra, tailor-made scheme is there. PM Swanidhi, there is a tailor-made scheme is there. Stand Up India, tailor-made scheme is there. If it is outside the purview of tailor-made schemes, they are scared. So because they may not take so much risk. Then as I told, smaller loan amounts, actually they should give more trust. But now smaller loan amount, they are not interested, because the same amount of time they should devote for small loans or big loans. Then longer processing time, that is also one of the problems. Then if our financials are not good, then bargaining power is very less. You cannot bargain with the banks or finance institutions for lower rate of interest. Then collateral comforts. So even though there is credit guarantee scheme is there, but the credit guarantee scheme, people are having some aversion for that. So they think that it is not a collateral. I don't know why it is.
So you mentioned a couple of government schemes and initiatives which are currently available for the support of MSMEs. Can you tell us how effective are they?
That means schemes you want me to tell? There are many MSME schemes which they also give very, what you can say, excellent schemes are also there. For example, for a new person he or she wants to start a new business, there are three categories. One is trading, another is service, another is manufacturing. PMEGP scheme, Prime Minister Employment Generation Scheme, that is the excellent scheme all over the globe. This is the best scheme I can tell now. Now they have doubled the outlay also, that limit also. Earlier for services and traders, the limit maximum was 10 lakhs. Now they have enhanced to 20 lakhs. In case of manufacturing concerns, earlier 25 lakhs limit has been enhanced to 50 lakhs. Promoters' income ceiling is not there. So some educational qualification, A standard, SLC and all enough now. If you have SSLC, you can take 50 lakhs loan also under manufacturing. There are two categories of entrepreneurs, special entrepreneurs and general entrepreneurs. Special entrepreneurs are those women, SC/ST entrepreneurs, OBCs, minorities, ex-servicemen and physically challenged. Other than these entrepreneurs, remaining are general entrepreneurs. Special entrepreneurs, margin is only 5%, promoter margin. 95% will be financed by the bank and there will be a subsidy from central government. In case of rural area, it is special entrepreneur 35% and general entrepreneurs 25%. In case of urban area, special entrepreneurs 25% and general entrepreneurs 15%. Margin, special entrepreneurs 5%, general entrepreneurs 10%. And this is fully guaranteed under CGT MSE scheme. Jameen bhi nahi chahiye, jameen bhi nahi chahiye. No guarantor, no collateral. Up to 50 lakhs. For example, a lady entrepreneur, if she want to start any manufacturing unit in rural area, up to 50 lakhs she can borrow with only 5% margin, 2.5 lakhs she has to contribute and 35% subsidy. That means 17.5 lakh subsidy through bank directly from central government. Within 3 months that money will come. That subsidy amount will be deposited in the bank with a lock-in period of 3 years as a fixed deposit. For that, bank will not give any interest, and to the extent of subsidy amount received, to the extent of that amount on loan also, they don't charge any interest. This is one of the best schemes under PMEGP schemes, but this is applicable only for new enterprises. If they want to start any new industry or new enterprise or new trading units. And here also another cap is that in manufacturing concerns, what they can do is up to minimum 60% they should invest in fixed assets. Only 40% working capital, it is permitted. For trading and service enterprises, 40% minimum in fixed assets, 60% they can invest in working capital. One is PMEGP. Then is Mudra loan. There are 3 types of loan. Shishu, Kishore and Tarun, 50,000, 5 lakhs and 10 lakhs. Now in this recent budget, those who are repaying under Tarun category promptly, their limit has been doubled from 10 lakhs to 20 lakhs. Then one more scheme is the Stand Up India scheme. Under the Stand Up India scheme, only ladies can stand up. Men cannot stand up. Okay. Men, if they are SC/ST entrepreneurs, then they can stand up. Under this scheme, any greenfield ventures, that is new enterprise, whether it is service or it is trading or it is manufacturing, up to 1 crore under this scheme with the 15% promoter margin, 85% bank and finance. Other than this general scheme, any state subsidy applicable or any other central subsidy applicable, they can avail simultaneously. That is Stand Up India scheme. Then Smile scheme is there, SIDBI. Smile scheme means that is to meet the gap between the margin money brought in and margin money required. That is 10% of the cost of the project. So they will give as a margin money maximum 25 lakhs. That is seed funding. For that, concessional rate of interest and repayment can be taken up to 10 years. Remaining 15%, because normally 25% margin, promoter has to bring in. Remaining 75%, normal term loan can be availed. Then CGT MSE scheme, credit guarantee scheme for micro and small enterprises. Under this scheme, up to 5 crore without any collateral, borrower can take loan both for new as well as expansion. All categories now, earlier trading was not included. Now traders, retail trade, wholesale trade, even educational institutions, they can be covered under CGT MSE scheme, provided subject to the definition of micro and small enterprises. Medium enterprises, they are not eligible for credit guarantee scheme. Suppose promoter has already availed 5 crores under CGT MSE scheme. Next year his business has been doubled. He or she wants additional 2 crore. Then what to do? In such cases, hybrid CGT MSE scheme also has been introduced. They can bring collateral. To the extent of collateral, they will cover under collateral. Balance amount they will cover under CGT MSE scheme. But wherever CGT MSE scheme they are availing the loan, they have to pay the CGT MSE fees. Annual fees will be there. It is like an insurance. Credit guarantee trust for micro and small enterprises. They will shield this loan repayment. In case of any default, the member lending institutions, that means banks or NBFCs, they can take claim from this credit guarantee trust. But the insurance premium should be borne by the promoter. That premium, earlier it was very high. Now they have reduced it to a maximum extent. If you want, I can tell the premium also very less now. Up to 10 lakhs, only 0.37%. Up to 50 lakhs, 10 lakh to 50 lakh, 0.55%. 50 lakhs to 1 crore, 0.6%. 1 crore to 2 crore, 1.2%. 2 crore to 5 crore, 1.35%. But the problem is, bankers, while they are lending under CGT MSE scheme, they will add additional risk premium in their interest rate. They will charge 1 or 2% higher rate, some banks. But some banks, some banks, the rate of interest remains same, but many banks, they charge higher rate of interest or loans under credit guarantee scheme.
Sir, can you discuss with our attendees the challenges businesses face in maintaining a healthy cash flow and how can they manage it?
Challenges are many, but every challenge should be taken as an opportunity. Okay. See, normally, first challenge is when you make sales or under service, getting payment from the customers, that is receivables. That is the main challenge. If the receivable gets delayed, then every month of delay, the interest will be added, the profit margin will come down. So then inconsistent revenue stream. What is this inconsistent revenue stream? See, this month last month because of heavy rains, whatever you expect, sales might not have taken place, except for those who are selling raincoat and umbrella. For them maybe bumper. For other than them, restaurants. If it is raining heavily, who will go to the restaurant? Tourism units. Who will go for a picnic? This is all issues. Then there is heavy rains. This is one. Or heavy drought. Non-availability of water, lot of heat waves. So, depends on this what you say that atmosphere also. It may also restrict your revenues. Then you may forecast a particular revenue. One competitor may enter. They may come out with the scheme, buy one get one scheme. Then if you don't have buy one get one, if they have buy one get one, they will go to them. Okay, whether the quality is good or not, people want discount, heavy discount and offer schemes. Then high operating costs. See, year by year what happens? Electricity bills will increase, wages cost will increase, interest rate if it is increased, raw material cost many cases they go on increasing. But according to the increase in input, you may not be able to increase the output. That is another thing. Then inventory management issues. The inventory management issues means sometimes you may have to keep buffer inventory because some raw materials are not available throughout the year, seasonal industries. They may have to store the raw materials required for the throughout the year in one go. In such cases, you have to store maximum 3 months, 4 months, 5 months, 6 month inventory level. In that such cases, very difficult. But nowadays in automobile industry and all, what they do is manufacture of cars, trucks and other scooters and all, they have adopted just-in-time inventory. That means they will give each part to different vendors. So they will supply and the inventory cost of the main, that means unit is reduced to that extent. Then unexpected expenses. So as I have already told, increase in power tariff, increase in interest rate, then increase in raw material prices, increase in labor prices, logistic cost. And now you see international, because of unrest in international level, now ship freight has been doubled, tripled, 4 times for export. That is a hit. So these are all the problems. Then difficulty in assessing the credit. So if you don't have a credit history, good credit history, then very difficult to get loan from these banks. Then you have to go for alternative. You should explore alternative way of financing, NBFCs or finance companies. So that will again become difficult. Then poor financial planning. Many units, they don't plan. There is a saying, fail to plan is plan to fail. If you don't plan properly and if you want to make some expansion, suppose one power cut will be there, scheduled power cut, unscheduled power cuts, then suddenly you may require generator. If you apply for the loan, they may take 15 days, 1 month. Then what you will do? You will buy the generator by some finance companies. Instead of 7 years, 5 years, they will give you 3 years repayment. Again, you will be struck. Then high debt level. Now MSMEs, what they face is debt is maximum. They borrow lot. When the debt is maximum, the stress will be there. Day to day for production, they will struggle. इधर पैसा आने के बाद उधर रॉ मटेरियल खरीदेगा, वो सब करेगा तो देयर what you can say that margins will further reduce. You don't have the advantage of advance payment and buying the raw material. Then your costs will also increase. So inefficient cash management. So receivables, you should always track. Then payment, you should see. All this planning is required. These are all some of the challenges faced by the entrepreneurs.
And so how can MSMEs leverage technology to streamline their financial management and improve their chances of securing funds?
It's a good question. Nowadays, technology plays a vital role in any business. See, now starting from financial management, bookkeeping, budgeting, receivables management, and payable management, payroll, all these are technologically now, technology driven now. Our accounting also now, they are doing on cloud this basis, or tally or everything. See, it will be real-time accounting you can do. Billing automatically entry will come. So these are all the advantages of this financial management software you can do. Cloud-based accounting solutions you can do. Online invoicing and payment system you can do. Data analytics and reporting tools you can adopt. Budgeting and forecasting software you can use for the purpose of your business. Then automated expense management. So much it will track. If it is more than that expense, then there will be a break. Then digital loan platforms we already discussed. Then customer management system, CRM. See, now if you just make inquiry with your car, when one automobile dealer, you are gone case, 10 calls will come. What is your experience while asking inquiry, whether they were courteous, and how is the product, all this. If you keep the vehicle for servicing also, lot of calls, follow-up calls, everything will come. That is customer relationship management. Then integration with banking and payment gateways. So most of the cases now, small vendors also, they have payment gateways, Paytm Karo or Google Pay, all these things, Beam app. So everything will be formalized. So those who are filing the income tax or GST returns, based on that they can make the summation. Based on that they can declare as a sales, and based on that they can make payment of taxes and file the returns also. Then cyber security measures they should take, because sometimes financial data should be protected from cyber threats also. Correct, no? Next, digital financial literacy tools that we have already discussed now. That are all the automations which you can conduct.
Sir, how does an MSME's creditworthiness affect its ability to access financing, and what steps can be taken to improve it?
There are two types of lending. One is informal lending, another is formal lending. Informal lending means small businesses and all, for them it is very difficult to go for formal institutions. They may go with the money lenders and other things. Then they will be in the clutches of their this all thing. Morning they will take the loan, evening they will return. Rate of interest is more than 36%, 72%, sometimes more than 100% also. For them, government has come out with the that is PM Swanidhi scheme for street vendors also. First 10,000, then 20,000, then 50,000. If their business is increased, then they can go for Mudra loan scheme. That is also 50,000, 5 lakhs, 10 lakhs. If they are regular repayment under this Tarun category, 10 lakhs, then they can go for 20 lakhs loan also. Then limited legal resource. What happens if anything goes wrong and all? They are not much legally, they are thorough. See what happens, agreements bankers will give with so many bunches of pages. So whenever you want to take the loan, you have to sign all the pages. Who will read all the pages? Sometimes you see, suppose the rate of interest is more here. You want to take over this loan from this bank to another banks. Then they may put 2% penalty for takeover or premature closure, 2%, 5% and all. That will cost you a lot. And if you take over from one bank to another bank, again there, new documentation, again stamp duty you have to pay. Here you have to pay premature closure charges. There you have to pay again documentation charge, stamp duty charges, processing fees again. That is also very difficult thing. Then heavy processing fees, bankers, that you cannot much negotiate with them unless you are very strong. Then in case of default, so there is a scheme of restructuring. See, now the thing is SMA, they are classifying loan accounts into SMA 1, SMA 2. Once it becomes SMA 3 means NPA. Once it becomes NPA, bank will not think of restructuring the loan. They will always try to go for recovery. Suppose a person gets fracture, he cannot be taken to graveyard. He or she should be taken to the hospital. You have to make bandage. Then normally they have to take rest for 1 or 2 months. To become normal, it will take 3 to 6 months. Here also, if there is any default due to some reasons beyond their control, then restructuring of the loans is a must. These bankers, they are not interested in restructuring of the loan, because if they restructure the loan for next 1 year, it will continue to be NPA. After that only, as per the new restructured norms, if it is repayment is done, then that will be upgraded. So no bank wants to spoil their quality of the loans. So everybody wants to go for quality loans only. So once they have this problem, others will also not look into. So that is a problem. So you have to always see that buffer money, or during your difficult times, you should keep some emergency fund. That is a must. Otherwise, it is very difficult to sustain.
So, can you also explain to our attendees the importance of financial literacy among small business owners and how can it impact their financing options?
The financial literacy, they have to participate in various MSME programs, then budget announcements, then state government schemes in state budget, central government scheme in central budget, then from time to time various schemes they are announcing. Here MSME champions portal is there, so various portals are there. NSIC is there, National Small Industries Corporation. If they register under NSIC, then they will help us. Whatever latest things are there, they will try to coordinate. Then they should go to a proper consultant who knows about all, not ABC, who knows about ABC to XYZ of everything in this financial field. Now, for example, there are two types of subsidies. One is front-ended subsidy, another is back-ended subsidy. Front-ended subsidy means before taking the loan, you have to take the subsidy. If you once you already taken the loan, then you will not get it. So that's why you have to plan in advance. Some food processing units and all front-ended subsidies are there. Many schemes are coming now and then to give support for small or this manufacturing sectors, that they should encash. Then various seminars, various trade fairs, and district industry center is there in every district, in almost all the places. There they are up to date with all these schemes. Then some cases interest subvention schemes is there. For exports, there is interest subvention scheme is there on packing credit and all. So interest subvention is there. Duty drawback they can take. GST refund they can take. All these things they should either they should go through on day-to-day basis, or they should go to a proper consultant who knows about all these details, or they can go to district industry center. They are aware about all these plans and schemes. Nowadays it is not difficult for knowing about the schemes, because in the net also we will get lot of all the schemes. Whatever if you put, you will for example during COVID times, emergency credit guarantee scheme, it was there, 10%, 20%, then hoteliers, hospitality industries, it is more. All these details were available in open domain. They could have gone through that, and many bankers and they were not informed. If you give the application, they are bound to give. So these are all the things which you can get it through all these portals also. Then there is one portal called GEM portal. If you register under GEM portal, public sector undertaking, if they want to procure any of their requirements, they will give preference for GEM portal.
So, what role do venture capital and private equity play in financing MSMEs in India?
Normally, venture capitalist and this one, your angel investors, they are interested in startups now, because in startup stage, nobody will give you money. Now in India is the third largest startup ecosystem in the world. So on an average, 88 startups are being registered every day. 1,25,000 plus startups are there in India. But the startups support Startup India seed funding scheme is there. From there they can take the seed funding. Then Nidhi Paya's grant is there. Then many states they have their startup support system. From there also they can take. Then this venture capital, if they are getting incubated under incubation centers. There are many incubation centers. Now, for example, Atal Incubation Center. There are 68 plus Atal Incubation Center across India. So, nearest incubation center, if they are getting incubated, so seed funding they will facilitate. Even they will connect them. They will time to time they will conduct workshops. They have mentoring schemes. They connect with the venture capitalists or angel investors to these entrepreneurs. So even MSMEs also, MSME listing is there. MSME, if they go for public issue under NSE platform also, there are facilities available. They can get it done. And pre-issue also some venture capital funds are there. Angel investors, they will invest in these companies in their shares. Once they go for public issue after some time, they can exit from that with better benefit. So angel investors and this one venture capitalists, they are interested in only such businesses where technology driven and where the margins are in times, not in percentage.
Got it. Understood, sir. And so, how can businesses prepare for unexpected financial challenges like economic downturns or market disruptions?
See, everywhere there is unexpected challenges. Now, as I already told, there were challenges in during our COVID times. That is across the globe. Not only, see, when the rain comes, it comes to not your compound, it will come my compound, it will not come, no, not like that. So that will come everywhere. So, but we should have always buffer, as I already told, when they earn sufficient, they should have some buffer, this savings. So other than day-to-day things, they should earmark some funds during difficult times. Then they should diversify their revenue streams. They should not depend upon single product or single source of income. They should always diversify their risks. Then emergency fund, as I have told, when you earn sufficient, you should earmark some reserve fund or emergency fund with you. Then cash flow, you should always control your cash flow. See, receivables, if the payment comes very much late, such customers you can discard, and those who pay prompt only, you can concentrate on them. And you should have sufficient risk coverage by insurance also. So if you do all these things, definitely these are some steps during difficult times you can get yourself shielded. And restructuring, as I told. So one more thing is, there is in case you go for new projects, there is a scheme called DCCO, date of commencement of commercial operation. Suppose you take a repayment period of holiday of 1 year. Within 1 year, you cannot commence production. There is a provision as per the RBI norms. In other than infrastructure projects, there is a provision for 2 months extension of 6 months each. That is 1 year. In case of infrastructure project, 2 years extension can be taken, and rare of the rarest cases, if the circumstances are beyond their control, additional 2 years also DCCO extension can be done. But now what they have done is, even for this DCCO extension, if they do, RBI has stipulated additional 5% provisioning norms. Then banks are also scared. And as I already mentioned, restructuring. If you have temporarily problem, you should restructure your loan, and you can postpone the repayment. And FITL, what you call funded interest term loan, that can be done. And additional working capital you can take from bank, provided they give.
So, what are the best practices for managing debt and ensuring repayment obligations do not hinder the business growth?
See, best practices means you should draw down your commitments and your revenues. Sometimes what happens, EMIs will hit your account on the specified date, but you should not wait up to specified date. You should keep provision for that well in advance. Second thing is, if you have working capital limit, say you have the working capital limit of 10 crores, say 1% per month is the interest. What is the interest on 10 crore? That is 10 lakhs. So your balance in your OD account should not be 9 crore 99 lakh 90,000 or 99,000. You know that on particular month end interest is going to hit. So you should keep the sufficient provision for that interest payment. Even though your account gets overdrawn because of interest payment, your CIBIL score will come down. And whenever there is any limit, you should not draw to the full extent. So you should draw only 60, 70, 75, 80, 90. Once it crosses 90, you should not draw. You should think that even if you have 10 crore limit, you should think that you have only 9 crore limit. So like you see, when we go for traveling, Suppose our expense is only 5,000. Whether we will keep only 5,000 in the pocket? No, no. We will make provision, at least 10,000 we will take, buffer stock, buffer money, all these things. Then always debt to equity. You should not take debt maximum. Of course, even though in MSMEs, the 3:1, 4:1, that means 20% margin also they can fund. The best thing is debt equity 2:1 is the best. That means whatever your capital is that, double that only you should borrow. You should not borrow more than that. Otherwise, it will be a problem. Then, if you have any issues, then you should have you should be very strong enough to negotiate favorable terms with your creditors, because during tough time they should stand by you. Then cash flow, you should have always strong cash flow, so that any difficult time you can manage. Then you can improve your credit worthiness. Many cases, especially proprietorship concerns, they don't think that business and proprietor are different. Business entity concept they don't follow. So for marriage also they draw money. For personal commitment also they draw money. That should not be the case. Proprietor should think that he is the CEO of the company. Whatever CEO we pay, only that much amount we should draw from the business. And remaining money they should invest in alternative investments. Then during this difficult time, they can be survived, and they can seek professional advice also, and they can communicate with the lenders also. So normally whenever you take loan, you should always, that's why, take longer tenure. If you pay early, there is no problem. But if you are not able to pay, then your credit score definitely hits.
So now let's talk about smaller businesses. Tell us, how can they benefit from microfinance institutions, and what are the challenges associated with this form of financing?
See, microfinancial institutions, they lend to on day-to-day basis, collection basis to small vendors, small businesses and all. So, but their rate of interest is a bit high, not bit more. That is, suppose in bank it is 10%, they may charge up to 16-18%. And their collection system is very efficient. Day-to-day basis they may collect, and weekly payment they can fix. But there you can take only small loans. You cannot go for big loans. That's why government has come out with the PM Swanidhi scheme. That is only for street vendors. Or this Mudra scheme. Mudra scheme also, a lot of checks and balances are there. So, in microfinance institutions, that is flexible repayment schedules they give based on their cash flows rather than their financial analysis. Then it is like a financial inclusion. The last mile delivery can be affected through this microfinancial institutions also. Then they will get some training or support systems they will provide, and they give loans also in faster way, but they are very costly.
So now let's talk about GST regime. How do you think these GST regimes affect the financial management and cash flow of these smaller businesses in India?
See, GST, whenever you take capital goods, so there is normally 18% GST. If there is 18% GST, what you can do is, there are two types. One is composition scheme, another is regular scheme. When there is sufficient this input credit available in capital goods, you should take regular scheme, not under your composition scheme. One thing. Second thing is, when you make sales and longer the period of receivables, your money is struck. So, because you are giving the bill to the customer including GST, that GST also you should, to that extent also your working capital is blocked. When the money comes late, then definitely it will be a difficult proposition for borrower. Then one more thing is that the person, when we make sales, they should upload. Then only that input credit is available to us. That is also should be ensured every month. Otherwise, you will not get input credit. Then for small businesses, lot of schemes as I already told, that is composition scheme up to 1.5 crore. If your turnover is up to 1.5 crore, you can go under composition scheme, and only quarterly returns with only 1% of the total turnover you have to pay as the GST. But the thing is, you cannot take input credit. Even now, restaurants and all, they have made 5% under this composition scheme. They cannot take rent, that GST paid on rent, GST paid on all this, whatever raw materials they have bought, all these things, it is not possible. Another thing is up to 40 lakhs, very small businesses, there is no GST applicable. They need not have to register under GST. Earlier, that was 10 lakhs, that they have enhanced up to 40 lakhs. Of course, some relaxation is being given under GST regime.
And so, how can businesses negotiate better in terms with lenders, and what are some tips for successful negotiation?
Terms negotiation based on how strong you are. If we are strong, we can negotiate to any extent. If we are weak, they will take the advantage. Always survival of the fittest. See, you should always maintain your financials very healthy. Like our body, we should maintain our health very healthy. In financial statements, they will depict your financial health of any enterprise. So financial health, all these ratios, as I have mentioned earlier, you should try to maintain those ratios, showing proper profits, paying the taxes on time, making every advance tax due dates, 15 June, 15 September, 15 December, 15 March, all advance taxes on time, and all the returns paying on time, employees payment on time, ESIC, PF on time. When they tick, because I told no, they will fix the rate of interest based on your rating. Either it is internal rating or external rating. Any rating, they have benchmarks. As per the benchmark, everything comes plus. So it is the advantageous position. And if you have better collateral also, you can negotiate. And sometimes, suppose their way of funding is not suitable for your business, asset-backed loan also you can take. Based on your property, you can take, in many banks, there are various schemes in various banks that you can make use of those advantages. So ultimately, what is that? Survival of the fittest. If your financial statements are strong, if the promoter's background is good, and if your sales and other parameters are robust, then you have in a bargaining position with any financial institution. Now credit marketing is in place. No, you can also, they will compete to give better rates for you.
My last question to you, sir, is what strategies can MSMEs adopt to diversify their funding sources and reduce dependency on a single lender?
See, normally what happens, multiple banking is allowed nowadays. But in case of working capital, multiple banking is very difficult, because same inventory, same receivables with various banks, hypothecation is difficult. In such cases, that is consortium lending can be done. Or you can take term loan from one bank and working capital another bank. Term loan from financial institution, working capital from bank you can do. Term loan from CDB you can take. State financial institutions are there. Sometimes in state financial institutions, women, they are giving at 4% interest loans. In that case, you can borrow from that state financial institutions also. So it depends on case to case, how you can, case to case, you can do this.
So with that, we've come to the end of today's episode, and I would like to extend a heartfelt gratitude to you for taking time out and sharing your detailed insights with our attendees. Thank you so much, sir.
So it's my pleasure that your JSW is doing a lot of good work also. They are not only they take interest of their employees, they are taking interest of their vendors also. Most of their vendors are MSMEs, and I should applaud the efforts made by JSW in this supporting this MSME entrepreneurs. Thank you.
while conversing with you, sir, we've addressed some of the audience questions as well. However, if the audience feels that there have been questions that haven't been answered, please write them down in the Q&A section and we will respond to you as soon as possible. Also, if you have missed any part of this episode or the previously shot episodes, you can go on YouTube and type GSW1 MSME and you will find all our episodes uploaded there. Thank you so much, sir.
Okay, thank you.
Bye-bye.